This week, available inventory of homes for sale inched down across the country. It was the lead up to the holiday week, so that's not uncommon. But it is indicative that we are roughly at the peak of inventory for the summer. We'll have a few more weeks of inventory gains, but the long stretch where inventory has been growing compared to a year ago, that stretch is over. The seasonal peak for inventory is, roughly right now. So it's not a big deal that inventory dipped this week. The important point is that the seasonal peak doesn't need to happen in the season. Last year, inventory didn't peak until the end of November. So the fact that we're probably at the peak now tells us a lot. It tells us that falling interest rates now are indeed putting a floor on demand. Last year, rising rates were slowing demand at this time. So we can see that the market is not deteriorating from here. Last week I mentioned that Texas and Florida inventory had ticked down. Both of those states ticked up this week with more unsold homes on the market than a week prior. So I mentioned this because it's sort of what I expect for the whole country over the next several weeks. So up a little, maybe down a little week to week. And I expect that we won't see consistently shrinking inventory until later in October. So there's no sign of any rush of buyers, of course. So we're now really looking at the spring before we expect to measure any notable gains in buyer behavior, if we're lucky and mortgage rates stay or go lower by then. Next week, Thursday, September 12th, is our monthly webinar when we get to dive into all the details. Rates are falling, and so will we see any improvement in home buyer demand in 2024? At the local level, many of the big trends from earlier in the year are changing. So the election is underway. There's a ton to cover. So there's a link in the description below to register for that webinar. Click that to reserve your spot now because those fill up fast. That's next Thursday, September 12th. At Altos Research, of course, we track every home for sale in the country every week. All the pricing, all the supply and demand, all the sales, all the changes in that data so that you can understand what's happening in the housing market immediately as it happens. So I'm Mike Simonsen. I'm the founder of Altos Research, and let's take a look at the details of the U.S. real estate market as we roll into September 2024. There are now 704,000 single-family homes unsold across the market, across the country right now. That's a fraction fewer than a week prior. So this is the lead up to the Labor Day holiday, so it's not totally uncommon for a dip in inventory. If you are readying to sell your house this fall, you generally don't start on the holiday weekend. So last year, though, inventory rose 1% during the same week. So that's the comparison we're working with for the rest of the year. Last year, demand was already slowing, and then we got hit with that big mortgage rate spike in September. Rates rise and inventory rises. In the inventory chart here, you can see the curve for the year. I've also highlighted the red line from last year. You can see that 2023 had very few sellers all year long, and then in mid-September, inventory started climbing again with the mortgage rate spike at that time. So 2023 ended the year with more homes on the market than 22, even though we had a very restricted inventory all year long. You can see that at the right end of the chart here. Mortgage rates rose to 8% at the end of the year last year, and that pushed up the levels of unsold inventory. You can also compare how the inventory trends this year. As I mentioned, we are roughly at the seasonal peak of inventory, and this will bounce around for several more weeks. And you can see that pattern in the gray lines here from years past. I expect to see a more seasonal pattern this year. We don't have any strong demand, of course, but at the margins, affordability has improved. So slightly more transactions happen. That keeps a cap on inventory growth. And it's the opposite trend of what we had last year. Mortgage rates have eased down in anticipation of the Federal Reserve's meeting in a couple of weeks. It is widely expected that the Fed will cut short-term interest rates in that meeting. So I don't predict mortgage rates, but I think it's important to note that the markets could react the opposite of what we expect. Mortgage markets could cause mortgage rates to jump even if the Fed cuts. So if that were to happen, all these comments about peak inventory for the season are out the window. it'd look more like last year with rising inventory all the way through November. So fingers crossed that for the American homebuyer, that rates have indeed peaked and continue to decline for a while. So we will see that inventory, that impact in the inventory curve, of course. On the new listings, there were just 59,000 new listings unsold this week for single-family houses. There were another 10,000 new listings that are immediate sales. Both of these numbers are very low. Very few sellers at this point in the cycle. In fact, this week saw 6% fewer sellers than even last year, which was already super low. So most of this year, we've had more sellers than a year prior. So that's a change. It's just 1 week, but it's something to keep an eye on. Since the immediate sales number was only 10,000, that's an indication of continued sort of weak demand. We haven't seen any uptick in that buyer urgency as measured by those immediate sales. The best homes at the right price still get offers immediately after they're listed for sales. During the pandemic, when Americans were buying everything in sight, that frenzy, there were 25 or 30,000 immediate sales per week. Now there are only 10,000. And so this number is down several percent for the week. And the immediate sales pace hasn't really shown any recovery with newly cheaper mortgage rates. This is a view of the weekly new listings for the last 9 years. Each bar is a week. The taller the bar, the more sellers. And what's cool is that you can see 3 distinct phases. Before the pandemic, in more normal times, we'd have 90,000 or so new listings, single-family homes, new listed and unsold each week that added to inventory. Then during the pandemic, that ranged up to 80,000 per week, and we were buying even more than that. Then in the last 2 years, post-pandemic, it's been really about 70,000 sellers only. So you can see each year's seasonal curve in the listing volume. The low points each year here are the New Year's holidays. In the blue section at the far right of the chart, you can see how 2024 sellers tended to exceed 23, but they're still very low compared to any time previously. Next year, we're looking for this listing volume to inch up further, closer hopefully to the old normal levels. The takeaway for the new listings volume chart here is that sellers are not in any hurry to list and sell homes. There's no sign in the data of that changing. Next year, a healthier housing market will hopefully see that number climb over 70,000 per week to maybe 80,000 per week, and that's what we'll have to keep our eye on. There were 64,000 new contracts pending this week for single-family homes. That level of sales each week continues to be just about the same as last year. There were another 12,000 condo sales started, so that's 76,000 total sales this week, which is 2.5% fewer than a week ago. It's the lead up to the holiday weekend, so that always ticks down. It's roughly the same number of sales started as a year ago. So we're looking at roughly the same sales levels a year ago with slightly fewer sellers, and that's why inventory is probably around the seasonal peak with annual gains in inventory compared to last year starting to compress. September and October are going to be fascinating to watch the sales rate here. Each of the last 2 years, September and October were brutal for interest rates and for buyer demand. So we're on the opposite side of that cycle now. So we're looking for any relative strength in buyers. Will we see it? Yet to see if we'll see it. The curves in this chart show how the seasonal demand obviously falls late in the year. And so will we see any relative strength in home sales after the middle of September? Like I said, we haven't really seen that change in demand yet, so I'm not holding out hope, but I do keep watching for it. The next opportunity in this set measuring the weekly contracts will be at the end of September. Does the sales rate decline more slowly than the end of the last 2 years? So we haven't seen that evidence yet, but the baseline does get easier in the fourth quarter because sales slowed way down in the fourth quarter of 22 and 23. So we're going to keep looking at the end of the month. The median price of single-family homes in the U.S. this week is $449,000. That's unchanged for the week. The median price of the new listings is $399,000, also unchanged for the week. These prices are just barely above a year ago. And so this is consistent with the concept of flat home prices for the year. The median price of the new contracts pending is $387,000. So this is the price point where people are buying homes. And that's what we're showing here. So that ticked up for the weekend, is still almost 5% above last year at this time. That's the price that people are paying for the homes each week, the new contracts pending. So the price of the new contracts is a pretty clear proxy for the sales. So these are the offers being made each week. The homes take a little over 30 days to close, so these sales will mostly happen in September. By this measure, home prices have been hovering in the 3 to 5% gains over 2023. So the current sales pace that we're illustrating here is showing 3 to 5% gains over 2023. So you should anticipate the headline numbers like the Case-Shiller Index to compress just a bit in the coming months. So there's nothing in the data that shows price declines like we had in the 2 points in 2022. So I've highlighted those two periods in gray here. In June and September of 22, there were big pullbacks in pricing. And we haven't seen any of that in 2024. So the active measures of prices, the price of the listings and the new listings, are inching closer to 0 to 3% gains. This indicates to me that we will see further compression in the sales prices by the end of the year. So staying barely positive though. So it's hard to imagine a scenario where home prices surge in that time. So the seasonal declines are normal through the end of the year. And the price reductions data continues to tell the story of relatively weak demand. I don't see any evidence of buyers accelerating now, even with recently lower mortgage rates. This is late in the season, so it's easier to see a slowdown than relative speed up effects with home buyers. In other words, since we're not yet at the seasonal peak of price reductions, it's really about the slope of this curve. So homes that are still on the market in September and October are more likely to take a price cut to attract buyers before the holidays. So as we get closer to the holidays, then more homes are likely to be withdrawn, so they're not sitting on the market with price cuts. So we get this peak, seasonal peak in price cuts every year in the fall. So will we be able to see the slowdown impact? We will be able to see a slowdown impact very quickly if rates were to rise from here. We saw that happen each of the last 2 years in September. Rising rates added to the seasonal slowdown. Falling rates now won't deter a seasonal slowdown like it did in 2020, but we're just looking for the market to behave a little better than last year. Currently, over 40% of the homes on the market have taken price cuts. That's climbing each week, as it does this time of year. But since rates are falling and affordability is improving, then by the end of the month, there will be fewer price reductions than we saw at the end of 22. So that's the dark line will cross the light red line in this chart. So what's to expect for pricing in the next coming months? So in the spring of 23, the price reductions curve was very useful. We were coming off that very slow fourth quarter of 22, but we saw homebuyer resilience in the spring of 23. Each week, that bright red line in January and February was dropping quickly. That was showing buyers stepping up in the first quarter of 23. That was an important signal because at that end of 22, that was not at all clear that it was going to happen. So the takeaway here with price reductions data is that this fall, the price reductions will continue to inch up each week. It's that time of year. We will end the year, though, with fewer price reductions than when we ended 22. And that will set us up to see if buyers in the spring of 25 are ready to embrace lower rates, assuming rates are indeed lower by then. So these big trends from earlier in the year are shifting now. And that's why we do this work every week. If buyers finally start moving, we'll see it in the data quickly. Maybe mortgage rates have finally turned the corner for buyers and sellers. These conditions can change fast and can be very impactful for smart decision making. They need to hear the data from you so that they know how to act. So you should join us at Altos Research. Go to altosresearch.com, book a free consult with our team. We'll help you know how to talk about the market with your buyers and sellers and clients and prospects today, there's a link in the description below to join us. Click that and let's get started.